program is brought to you by LGT Wealth Management. Welcome to the next chapter in trusted advice, where global strength and deep local relationships shape wealth that lasts for generations. LGT Wealth Management, lgtwm.com.au.
Hello, this is the Global View on this Friday. I'm Andrew Gagan. Thanks for joining us again here at Ausbiz. So let's get across what we saw overnight. Dampened expectations of another rate cut from the Federal Reserve in December have weighed on global stocks. And there was muted reaction on markets after President Trump struck a deal with Chinese President Xi Jinping to reduce tariffs in exchange for resuming rare earths exports. And mega cap earning results also proved to be a drag on Wall Street, the S&P and NASDAQ, closing lower as Meta and Microsoft fell on concerns over surging AI spend. Amazon forecast revenue increase of 20% in the third quarter, which was ahead of estimates on strong demand for its cloud services as businesses spend more on AI. That's offset weaker growth at its e-commerce business, the company shares surging more than 12% in extended trade as its forecast net sales of up to $213 billion for the fourth quarter. Apple forecasting holiday quarter iPhone sales and overall revenue ahead of analysts' expectations amid supply constraints, which are delaying shipping new phones to China, although the shortfall was made up by strength in other areas such as new AirPods that use AI to translate languages. Its profit topped Wall Street targets. Meta shares plunged after the social media company forecast notably larger capital expenses next year thanks to investments in AI. And Microsoft shares also fell after the tech giant reported a record capex of nearly $35 billion for its fiscal first quarter and more than spending would rise this year. However, Google parent Alphabet rose as steady growth in advertising and cloud computing powered better than expected results. AI chip leader Nvidia fell after it had given the market an extra boost the previous session when it became the first publicly listed company to surpass $5 trillion in market capitalization. Atlassian shares surged 12% in after-hours trade after the company reported quarterly cloud revenue rose 26% to just shy of $1 billion. Chipotle shares tumbled after the burrito chain axed its annual sales forecast with tariffs and inflation squeezing margins. And Australian sleep device maker ResMed reporting a 9% increase in first quarter earnings to $1.3 billion while announcing plans to expand its manufacturing operations in the United States. Well, President Trump says he's agreed with President Xi to trim tariffs on China's exports from 57% to 47% in exchange for Beijing cracking down on the illicit fentanyl trade, resuming US soybean purchases and keeping rare earths exports flowing. According to China, the deal also included a US pledge to delay for a year a new measure to stop Chinese firms from receiving US technology if they're part-owned by a sanctioned company. China has agreed to pause export controls on rare earths, which it says would last a year. Meanwhile, the European Central Bank keeping its policy rate unchanged at 2% as expected. ECB President Christine Lagarde saying that Europe's trade deal with the United States and the agreement between the US and China to trim tariffs had all mitigated downside risks to growth, saying from a monetary policy point of view, we are in a good place. This comes as Eurozone economy grew by 0.2% in the third quarter, lifted by buoyant growth in France and Spain that offset faltering exports. Well, US Treasury yields have risen on the diminished prospect of another Fed interest rate cut in December. The US two-year yield at 3.61%, the 10-year was up to 4.1%. And the US dollar index up on the day, the Aussie dollar having fallen back to 65.5 US cents. Oil prices are steady despite the potential trade truce between the US and China, Brent futures at $65 a barrel. Copper fell more than 3%, iron ore rising to $107 US a tonne. And gold jumped back above $4,000 following the Fed rate cuts and on apparent uncertainty over the outcome of a trade deal between the China and US. Spot gold up 2.5% at $4,023 an ounce. And Bitcoin has fallen back below $108,000. Let's get more on US markets then. Brad Gastwirth joining us from Circular Technology. Brad, welcome back. Good to have you with us again. Look, this has been a huge week for markets to consider, hasn't it? Obviously, with the Fed announcement, obviously also that deal between Xi and Trump, and earnings results at the same time. Let's start with the central bank, the Fed. What did you make of that? What we heard from Jerome Powell, perhaps damping down any prospects of a rate cut next month. And what do you think of the market reaction? And what do you think Donald Trump's going to make of that as well?
Yeah, a lot going on, Andrew, for sure. First with the cut, it was very much expected. I think most analysts expected a 25 basis cut, which the Fed did deliver. In terms of forward-looking statements, will we get another cut? It's possible. I'd say it's more of a 50-50 at current juncture. Inflationary measures are certainly higher. You have some economic indicators, the ones that have been reported prior to shutdown, certainly are more concerning on an inflation standpoint. So, I think it's sort of a mixed view if we get another cut. In terms of where we are from a market standpoint, the market widely expected it. It took it as it was. I think the market was very focused now on these earnings reports that we've got from the mega cap stocks, where we've had phenomenal numbers and phenomenal spending across the board.
Well, let's get to those then, Brad. 5 of the Mag7 obviously reporting this week. Why don't we start with the most immediate ones when we heard from Amazon and Apple? What did you make of it?
Yeah, so I mean, those the Amazon numbers very strong. I think that stock right now in the aftermarket's up like 12% or plus. Hard to find a negative there. I mean, in terms of cloud capacity, they're looking for a doubling in 2 years, doubling AWS capacity, certainly a positive for growth there. But spend, as we've heard from all of them, spend is increasing. So CapEx numbers across the board have been increased, certainly a positive for the supply chain. Moving on to Apple, the numbers were solid. I mean, you're starting to get a little bit of that iPhone 17 cycle right now. That's helped. I mean, other services have also helped drive the bottom line, the software and services aspect. And, I think right now the companies, it's delivering. There's still an incredibly large install base that will help them in next year's iPhone cycle. So it's really hard to bet against that stock at current levels. I go on to the Amazon. If I look at, Alphabet, the Alphabet numbers were strong. I mean, you had really good CapEx. Which is the thing that concerned people. I think, YouTube helped with margins. And if you look at moving on to Microsoft, it was the one out of the large cap that talked about margin compression purely because of AI spend. And, that was a concern. That's what sort of pushed the stock lower on the spending comment. And then lastly on Meta, I mean, it took it on the chin, clearly spending going up and to the right. And there's a lot of concerns on how that looks and, what the productization from that AI spend will look like going into next year.
Yeah, Brad, obviously then investors, they've shown their concern there, just that huge amount of CapEx, particularly as it brought out there with Meta. But I see you made the point that, look, these hyperscalers are in an arms race. So is it inevitable, though, that they're going to get that big spend at the moment? It is going to play out well for them as time moves on.
Yeah, I mean, it's really probably the trillion-dollar question, Andrew. I think right now it's a wait to be seen, how much each of them will benefit from this incredible spend, unprecedented spend that we haven't seen ever before. But it is very much an arms race. I think you characterized that perfectly because right now it's a race to AGI or ASI, which is artificial general or artificial superintelligence. And the first company that gets there really will be the most important company in the world. So I think right now there's an incredible race to get it to that level, and these companies are spending as if they have nothing else to get unless they win this.
Overall, how are you seeing the market at the moment? Obviously, given that AI trade which continues.
Yeah, I mean, I still expect it to continue into the end of the year, Andrew. I think the concerns we've had on the macro front, especially these U.S.-China tensions, or their renewed tensions is probably a better way to say it, have calmed down a bit after President Trump and Xi met recently. So you saw a little bit of a reversal on some of the tariffs to China from the U.S. That's going to help calm the markets a bit. But ultimately, you still have significant tailwinds for companies. And, while AI is starting to have impact on the labor side, I mean, you're starting to hear some of the companies having significant job cuts purely based on AI. I mean, Amazon took 14,000 corporate jobs. I'm blaming AI for that. And I think this is just the beginning. But having said that, these companies are going to be more profitable because of this because of AI. And with that, that's ultimately going to help the bottom line, help margins, and help profitability, which will keep stocks higher. So I'm still bullish into the end of the year. I still think we're in the very early innings, and I expect this to continue to go well.
And Brad, just finally, I can't go without asking you about gold. I know how bullish you've been on the precious metal. Has pulled back more in recent times, though. Are you still bullish?
Yeah, I still expect gold to continue to do well over the next several quarters and 12 to 24 months. It's still an asset I think most people should have exposure to. And we're still at the 4,000 level, which if you asked me a year ago when we talked, I kept on saying higher highs, but I mean it's moved higher and quicker than I think people anticipated. I still expect it to be an asset that people want to get their hands on. Central banks across the world are increasing gold reserves. I don't think that's going to stop, and I think it's a great hedge against potential market correction. So I still am very much bullish on gold.
Brad, great to get across what you're seeing at the moment. Thanks for joining us from Circular Technology.
Thank you, Andrew.
Let's refocus in on the local market. We are expecting a positive start. Obviously, we had a down day yesterday. So SPI futures pointing higher, up at just over 0.1%. Lots of quarterlies and AGMs to get across when we get going in just a couple of minutes. Stay with us for that.
This program is brought to you by LGT Wealth Management. Welcome to the next chapter in trusted advice, where global strength and deep local relationships shape wealth that lasts for generations. LGT Wealth Management, lgtwm.com.au.